What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we saw brand new all-time highs on the S&P 500 and the Dow Jones, and we did see the Nasdaq 100 taking a day to cool off. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. And also, because it is Friday, we will take a look at the bank account, which we can see is up 0.51% for the week. For the 1 month performance, we're currently up 4.16%, and we did start the bank account on July 8th with $25,000. Now, typically speaking, over the last 3 years, August and September have averaged 7 trade alerts per month for bank trade alerts. So we're definitely getting into those historical volatile months. So now could be the best time to try bank trade alerts if you haven't already. Remember, I'm running a 50% off promo code for your first month. So if you're interested in trying out bank trade alerts, you can find out all of the details in the description below. All right, jumping back over to the S&P 500, we can see we were up 0.17% today, and we closed yet again over our price target at 441. So this is definitely looking like a bullish breakout, and we are going up on decreasing volume. So this is definitely a possibility we could still see a FOMO rally, which could easily push us to our next price target at 446. So pay close attention to that next resistance level up there at 446, because remember, I always tell you with my price targets, each and every one of these price targets could lead to a pullback and possibly even a stock market correction. You saw how much difficulty SPY had breaking through 441, and it was a very volatile, choppy sideways move before we finally built up enough energy to blast through that level. So we should have a pretty quick trip to 446 because there's little resistance on the way there. And once we get there, we could see another pullback or possibly even trigger a stock market correction. Remember, just like I said in the intro, that August and September are typically more volatile months. And we do have data from bank trade alerts that does suggest there will be a lot of volatility over the next couple of months. So historically speaking, expect a lot of volatility going into August and September. And we are getting very close to the next price target at 446. So there's no way this is coincidental, and remember that we are climbing the wall of worry, and I would expect to see some of these fear readings switching to greed as we continue to climb higher. So be on the lookout for that, because it's going to be very impressive how fast the market goes from fearful to greedy. You want to be on the right side of the trade, and I can't stress it enough that when the market is fearful, it's typically going to go higher, and when the market starts getting greedy is typically when you're reaching a top. So as we climb higher, I want you to become more cautious, and I want you to understand the risks that go into the stock market as we climb and hit these price targets. As a bull in this bull market, it's your responsibility to manage your risk, and you always want to make sure that you're protected to the downside in the event that we do start seeing a huge wave of selling. I always tell you that the stock market takes the stairs up and the elevator down, so do understand you need to protect yourself as we continue to climb higher. I'm not telling you to short this market because I would never advise you to short a bull market. I'm just telling you to stay disciplined, and now is not the time to be over leveraging your accounts. So watch that critical resistance just above at 446, and you will have critical support at 441, and our 20 simple moving average is now at 437. So if we start breaking below support at 441, that could be an early warning sign that we're starting to roll over, and a close below the 20 simple moving average at 437 will be the confirmation that the market is likely going much lower. Remember, the higher we go, eventually we will be due for a stock market correction, so always pay attention to these critical support levels. We still have a very strong bull trend, but the price action is going to be the most critical thing to pay attention to, because as you know with moving averages, they are a lagging indicator. So while we do have the bull trend, if we see price action slicing through a critical support level, that will be your early warning sign that something is going on in the market and you need to pay attention. So watch those critical support levels and pay attention to that critical resistance just above at 446. From today's close to that next price target is only a 0.75% move to the upside, and we're already going to be there. So be cautious as we continue to climb higher, and do understand we are going up on lower volume, which is that stairs up and the elevator down. You can go higher on low volume, and you will typically go lower on very high volume, and that's where you'll see those very volatile pullbacks. On the Nasdaq 100 triple Qs, we went down 0.44% today, and we did see the triple Qs getting very close to the next price target just above 370. Remember, the triple Qs closed at a brand new all-time high just yesterday, and today we did see some more volatility on increasing volume. So it's possible the tech sector is getting near a top as we go to these next price targets at 370, but if we break above 370, the next price target will be at 376. So I'm never going to try to call a top in a bull market, and as long as we're in a bull trend above critical support, I'm not going to tell you there's anything to be concerned about. Just be cautious and be defensive because we are getting into some very critical price targets of mine. And remember, these price targets could always lead to a pullback or a correction. So on the triple Qs, pay close attention to 370, and above that, you'll be looking for 376. Your critical downside support levels for the triple Qs will be 367 and our 20 simple moving average at 364. If we start closing below 364, we will very likely start to roll over and we could see much more downside. We'll still have support at 360 and 358 and our 50 EMA down here at 355. On the Dow Jones, we were up 0.42% today, and we did see the Dow Jones breaking out above our critical resistance level and closing at a brand new all-time high. In the process, we did open a gap below that won't close until we get back down to about 350.66. So you have critical support at the previous breakout level at 351 and the gap closed just below, and the critical support level is down here at 349. The next price target is 355, and there's very little resistance from where we close to the next price target. From where we closed on Friday to the next price target is about a 0.87% move to the upside, and we could find critical resistance up at that level yet again. So pay attention to the gap close below in the critical support level, and if we break below the 349 support level, we could be retesting 348 or coming back down to the 50 EMA at 346, which will also close the gap. On the Russell 2000, we were up 0.61% today, and we finally saw the Russell 2000 closing back above the 50 EMA. Remember, the Russell 2000 was in a bear market and it needed price action back over the 50 EMA to start scaring away the bears, and that's exactly what we're starting to see. We see the 5 EMA and the 13 EMA back over the 20 simple moving average with price action back above all the moving averages as well. Now, it's still way too soon to say the Russell 2000 is out of the woods, but this could be a very quick trip to the next resistance level at 227 as long as we can stay above about 223. So critical support will be 223, 222, and our 20 simple moving average at 220. And now you have critical resistance at 227. It's very unlikely we're going to blast right through 227 like it's not even there. So do expect to see very strong resistance at that level. Above 227, we'll have resistance at 230 and 233. And above 233, we start breaking out and looking a lot more bullish. On the ARKK ETF, we were down over 2% today and we closed right on top of the 5 EMA. Remember, ARKK is in a full bull trend, which does mean you can buy the dip at critical support. So right now, the support level is on the 5 EMA at 123, and our 20 simple moving average and 50 EMA have critical support right around 120.7. So we have the bull trend and we're still above all the moving averages with the price action. So there's no reason to believe that ARKK is not trying to go higher from here. Remember, we very likely finished out a correction and we're heading higher, so look for resistance at 128 and 131 as your next possible resistance levels. If we start breaking below 120, it will start looking a lot less bullish and we could be rolling over in the ARK ETF. Today we saw the VIX getting absolutely obliterated on VIX Crush Friday with the VIX going down over 6.5%. Remember, I told you this was likely going to be the scenario in the bull case where we see the VIX getting crushed back down into the low 16s as we break out to brand new all-time highs. So right now, the VIX is definitely getting crushed and we are closing at brand new all-time highs. And this is increasing the probability that we could see another VIX spike in the very near future. So like I told you to be cautious as we're approaching SPY levels of 446, it's very likely the VIX is going to bottom out as we get to that price target and we could see the VIX in the low 15s, and then we could trigger another volatile wave of selling and we could see the VIX start spiking yet again. So this is all playing out like clockwork as we see the VIX heading lower and SPY going into our next price targets. So look for the VIX to potentially continue to get crushed down to 15, and then we could see another volatile wave of selling and we could start to see a volatile couple of months in August and September. So be on the lookout for that because it looks like this scenario is playing out perfectly. Jumping over to TNX, looking at our 10-year treasury note yields, we can see it spiking, going up 5.83% today, which will be very good for the financial sector. So it's very possible we are going to see another sector rotation and we could see money leaving the tech sector and going back into the reflationary trades like financials and industrials. So we'll watch TNX closely, and it does look like it is going to start spiking from here, but we did open a gap that could get filled as soon as next week. On Bitcoin, we're starting to look like we're breaking out, but we are finding resistance exactly where we would expect to do so at 43,000. We're seeing increasing volume on bullish price action, and we did hold up above that support level at 37,500. We're back to having the full bull trend, so this is looking very bullish, and I do have a price target on Bitcoin that takes us all the way up to 51,000. We'll have resistance on the way there at 47,000, so look for that as well. But remember, we still need to break above 43,000. We are forming a new daily higher high, so it's very unlikely we're going to have that ABC correction that I was talking about that could take us back down to 35,000. So things are looking very bullish for Bitcoin, and my price target is all the way up there at $51,000, and we do have the full bull trend. So watch these possible support levels at 40,600, 39,000, and 37,500 as we continue to climb higher. On Amazon, we were down 0.92% today, and we closed right on top of our support trend line right around 33.43. Remember, Amazon has a huge gap to fill above at 35.80, but we need to see price action breaking above critical resistance at 3,400, and then we'll have to break above 34.65, and then we'll have to break above that resistance level at 3,500 to close that gap. So pay attention to those critical resistance levels, and remember, if we start breaking down below critical support at 33.11, we could be going much lower. We'll also have support at 32.80, but below that, we could start to see Amazon starting to sell off and going much lower. On Tesla stock, we were down 2.17% today, and we did close just below the 5 EMA. Tesla stock is struggling to break out above that resistance level right around 715, and we could be pulling back to about 692 before we can see the next leg higher. Remember, if Tesla can break out above 715, we could start running to the next price target at 765. We have the full bull trend, and we are cooling down after a monster bull rally, so it's very possible we're going to find support and start running yet again. So watch that critical breakout level at 715 to send us to our next price target, and we do have critical support at 692 and our 20 simple moving average at 671. On Apple stock, we were down 0.63% today, and we did see Apple closing just below that 20 simple moving average. We see Apple consolidating in a wedge, and we're going to see a breakout to the upside or the downside in the very near future. Remember, during consolidation, you don't want to make any assumptions on which direction we're going to break out, and we did lose the full bull trend, so we can't use the trend to our advantage at this time. We need to see Apple breaking out above 149 for a bullish breakout that could send us to 156, or Apple breaking below critical support at 143 that could send us back down to the 50 EMA at 140, or to close the gap at 137.5. So watch the bearish breakdown below support at 143 or the bullish breakout above 149. We still do have a support level at 145 and the breakout level right around 144. So we have plenty of support just below that Apple could bounce off of. On the financial sector, we were up over 2% today, which goes hand in hand with that spike in the TNX. We opened a huge gap below, but we're very close to regaining the full bull trend with price action well above a positive sloping 5 EMA. The industrial sector was up 0.47% today with price action above the 5 EMA, and we still have the full bull trend. The healthcare sector was flat today, closing right on top of the 5 EMA, and we still have a very strong bull trend. The energy sector was up 0.92% today, and we see the energy sector closing right on top of the 20 simple moving average, and we still are in a bear market as long as we have the bearish trend and price action below the 50 EMA. So jumping back over to the S&P 500, it does look like we're well on our way to the next price target at 446, but I want you to be cautious as we approach that level. It's very likely we're due for a pullback or a correction in the very near future, and we are entering some historically very volatile months. So protect yourself to the downside in the event we do see volatility, but do understand I want you to remain objective, and we still do have a strong bull trend with bullish price action. We need to see a confirmation breakdown of a critical support level before we can say that this market is rolling over. So I want you to be a bull in a bull market. I just want you to be cautious and make sure you're not over leveraging as we're getting to these next price targets. Also, don't forget I have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and it does very well in all market conditions. You will receive all of your buy and sell alerts directly via email and text message, and all you have to do is execute the trades yourself. I'm currently running a 50% off promo code for your first month, so now is the best time to try out BANC Trade Alerts. You can find out how to join by clicking on the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the links in the description. So thanks for watching, everybody. Happy Friday. I hope you're crushing this market. And as always, I will see you in the next episode.